This is Alan Bush with ADMIS with the daily financial forecast for Tuesday, December 15th. Starting out with the stock index futures, we are seeing prices sharply higher this morning, even though the Fed meeting today and tomorrow is likely to produce a rate increase of 25 basis points, which normally would be considered to be a bearish factor. However, with gains today, it is most likely due to better economic data overseas, especially in the Eurozone, that is driving stock indices higher. Also, since it is widely expected that the Fed will raise tomorrow at the conclusion of their meeting, that appears to be fully priced in, or for the most part, priced into current trading levels. Longer term, we feel that the main trend is higher for stock index futures, and that after the Fed meeting is out of the way, that we will see gains in the balance of December, and also follow-through strength well into next year for all of the major indices. Now, moving over to the currencies, we are seeing the dollar index trading a little bit better. This due to ideas that the Fed will raise interest rates, which would normally be considered to be a bullish factor for the dollar index and bearish for foreign currencies. Seeing the euro currency a little bit lower, even though we did have investor confidence numbers coming in better than expected, and the pound trading a little bit higher after UK inflation coming in up 0.1%, this after several months of negative inflation rates or deflationary numbers. So higher inflation in the UK suggests that the Bank of England could be raising interest rates a little bit sooner than some had anticipated, and that is bullish for the British pound. Now, moving over to the interest rate futures markets, lower across the board in advance of the Fed meeting. Now, we will get a statement from the Fed tomorrow after the meeting. The statement is likely to be released very close to 1 o'clock Central Time tomorrow. Also, we will have a press conference after the statement from Fed Chair Yellen. Also, the probability of a rate increase at the meeting tomorrow is just around 80% or better. Also, a recent survey showing that many economists believe that in 2016 that the Fed will raise 2 to 3 times, with most analysts looking for 3 increases, and that is the consensus view, about 3 increases next year. Our feeling is that it will be much less, more likely 1 more rate increase next year, possibly 2. And if the Fed raises too many times, they run the risk of having to take it all back and bring rates back down again. Longer term, still thinking lower on the bonds as core inflation levels around the world are starting to increase. So the main trend for the long end of the curve futures is, we believe, to the downside. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland. 5617.